So the last thing that we're going to look at is the goal seek function. Now, as we recall, we needed to use a model as a predictive tool, as an analysis tool, and as a tool to show us if there are any bottlenecks or any weak points in our business. Now, this is what we'd use a goal seek primarily for, to calculate break-even points, and this shows us how robust a certain variable is in our business or a certain area is in our business. I'll give you an example. So in our business, we have got this line item that shows cash flow after senior debt service. If we want to know the break-even point of this business, in other words, the point where the business neither makes a loss nor a profit, okay, and we want to study a cost driver or a revenue driver and determine how robust the business is with regards to that cost or revenue driver, we could then do a goal seek analysis to find the break-even point of our model by changing that specific variable. So let's do an example. Let's find out how robust our business is with regards to movements in the copper price. So I want to find the price at which this business neither makes a profit nor a loss, it's break even, and what the copper price needs to be in order for this business to be a break even business. So what I'm going to do is I'm going to set the cash flow after debt service to 0, meaning that the business makes just enough cash to pay all of its operating expenses and pay all of its contractual interest and capital, but it makes just enough so that after that it's left with a 0 bank balance. Okay, so what I will do is I'll say data what if analysis goal seek. I'll set the cash flow after debt service in that year to 0, and I'll change the copper price to determine the copper price that gives me a 0 value. Now I have to go to the initial input of the copper price, and it would have to be a hard-coded number. And that year was 2024, and my initial hard-coded value for copper is, actually it's 2022. My initial value is this 5,940, which goes into my choose function. So I want to find the break-even copper price. And my formula tells me that at a copper price of 5,789.61, this business will make just enough revenue to pay its interest and its capital, and it will be left with a 0 bank balance at the end. So you can repeat this exercise for the copper price. You can repeat it for the electricity price. Find the maximum electricity price such that this business is viable. And you can use this analysis to find where your business breaks down the easiest. What are the weak points in your business? So in this example, the business can only take, let's call that a $100 and something decrease in the copper price, which is not that much headroom. So what you could do to protect your business against that is you could start hedging copper to protect against that. And pretty much the same for any other business in any other industry. You can identify the weak points in your business, whether it's in your logistics chain, whether it's in your labor, and you can try and put in place certain things that will make your business more robust to changes internally and externally, adverse changes. And this is the cornerstone of financial modeling, helping us to make our businesses more robust. So I hope you enjoyed the course. We've run through a lot of interesting and important concepts that investment bankers look at primarily when assessing whether or not a business is viable from a debt perspective.